Hello, everybody. How's everyone doing today? We're getting a little pullback in the euro. We've gotten Yellen's statement before she goes before the House today, and she's talking about that what's happening globally can impact U.S. growth, market interpreting it as she's going to stand pat for a while. I want to congratulate Ricardo on the call of Euro Pound yesterday. I'm not sure if it's the top, but it definitely was a top. Nice divergence on the daily here. Maybe we're looking at the head and shoulders back here to the neckline. We'll see. So, been talking about the euro getting up to 113.60 for weeks now on the daily back test. I think Ricardo showed that as well yesterday, that we got there. Not saying this is it, but perhaps we develop some type of top here and at least pull back to 1080, maybe even 980. So I think that this part of the move is most likely over. Yesterday I talked about liking the pound down here. Thought we'd get back to 46. Close enough for government work. We got up to 575. And crude's under pressure. Canada really isn't making much hay out of weak crude prices the last few days. So really don't know what to make of it. So who's in the house? Hello, Larians. Hi, Ron, Dinda, Roland. How are you? Numbers, welcome back. JM, BW, MRC, Simone is back. Welcome back. Hi, Sinatra. Yevgen looks like a new handle. Welcome to LAR, Yevgen. Thanks, Jay. I got my summer crew cut. Everyone welcome Yevgen to our community. If they're here, welcome Yevgen. Hi, Fame, how are you? FX Street Video. MRC, what's up? BW, JM. Hello, Khalid, how are you doing? So, okay, Larians, that's what I'm thinking in here. DZ, how are you? Welcome back, DZ. Are you new? Or I think DZ, you've been here before, correct? So here's the crude at new lows here, pressing the lows. I'm actually back in a reaccumulation mode down here. This low yesterday confirmed on the 1 hour, so we probably have to make new lows here first. Call me stubborn. Okay, well, welcome back then. Let's see some charts. What are the ideas going into the Yellen testimony from our community today? Dow's up 100. So 2850 is 88.6 back. This fib, I forgot who talked about this fib a lot. Thought it was a major fib. It's almost a total retracement. Right now we're at the 76.4. I like 78.6, so maybe this was 78.6. Aussie looks like might be a failing rally. Hello, Abel. How are you? Okay, here, I'll show my haircut one more time. I'll model it. We have a very interesting guest today. Terry Kinder is going to be with us. Terry has uses a lot of pitchforks and unusual technical lines. I'm interested in asking him how he developed his style of technical analysis. So Looking forward to talking to Terry Kinder today. Everyone doing okay? That was my haircut. I got a thumbs up on my haircut. Make me look older or younger. How are you, Abel? Mauricio is back online. The Globetrotter. I'm not sure if he's still in Colombia or not. JJ. They trimmed my eyebrows. You mean my unibrow? My unibrow, Rod? No, he actually takes a comb and thins out my eyebrows a little. Oh, thank you, Simone. I feel like I've lost 20 pounds. Oh yeah, oh yeah, you're still there? I guarantee you, Jay, I'm not a metrosexual. I do not shave the hair on my chest. I'm not a metrosexual. I just wanted a haircut that would last for a while. I just wanted a haircut that would work for a while. You know, I wouldn't have to go back for a few months. All right, Alexandros, what are you thinking here in oil? Way under the clouds, I assume. Oh, yeah. Way under the clouds. So what are you looking for here? Is it going to rain on my bottom pick for a while? We have the three pyramids of Giza. Alexandros is looking at pyramids here. Oh, head and shoulders. Now I got it. Okay, head and shoulders. 36, 31, takes it down to 26, right? Is that what you're saying? Unless it has to get back above 140. Am I reading you correctly, my trading warrior brother? Left shoulder, head, right shoulder, neckline, breakdown yesterday, 140. It's about a $5 formation, takes us down to 26.40. Could be. Is that what you see? Am I interpreting it right? Okay. I could make a sweater with it. Okay. Everyone thank Alexandros for his crude oil look. He's looking for about a $5 decline from here. Are you short? What stops above 140? And here's a Kiwi from Alex. Rejected at 61.8, failing rally. But still above the clouds. Still above the clouds. Right here. Nice look, Alex. So everyone thank Alexandros for his look at oil and the Kiwi 4 hour. Thanks for getting us going today, Alex. Hi, Sinatra. Everyone thank Alexandros for sharing his great work with us here. One of the better technicians in here. Hi, Pipper. How are you? Met Alex on Twitter. Interviewed him a few times. Hello, Sirik. How are you, partner? What are you thinking today, buddy? Sirik, another very good technician in our community. Intricate technical work by Sirik. Everyone doing okay? Good, buddy. What are you up? What are you thinking? Anything to share? Townsend, welcome back, buddy. You're flat. Fairy godmother. Okay. That's a new handle. Okay. Everyone welcome our fairy godmother. I can't buy bonds up here or gold. I'd say that maybe gold has completed something yesterday, and now we should look for some fib retraces. Here's what I think in gold. I'm not shorting it. You know, we could still make another run at 1210, 1220, but one heck of a run here. So let's just assume we're close to a top in the gold here, and maybe the dollar is going to rally. So some type of fib retrace in the gold. Fairy godmother. Maybe back to 1120, 1118. So I have some convergence here. That's about $70 lower. And my view on bonds, I have to go to I don't have a live chart in bonds, so I'll show you the TLT. I would not be long bonds here. I actually think I've been tempted to consider shorts here in the bonds. I use the TLT as a proxy. We have a few drives up here, a little bit of divergence in the bonds. You know, maybe it is confirming the highs, but I can't chase this or gold. Hope that helps. Here's a look from Jay on Aussie Yen. A bearish look by JJ. Nice look. Looks like we only have two drives. You saw this divergence yesterday. Now we're heading down. Like it, JJ. Everyone thank JJ for the Aussie Yen. Look here. Looks like a short. And gold from Alexandros is at a wedge. Oh, I see. Yeah. I think Terry Kinder shows it too. Remember down here, there were people talking about 980. Well, this is how we could go to 980, and I don't consider it likely anymore. But you just take this low, call it 1040. All right, call it 1050. 150 from 1050 gives you 900 gold. Although I think we're going to hold where we converge here and then head up to here. But a pullback looks like around 1126 would be an area to consider. Thank you, Alex. Thank you, JJ. Thank you, everyone, for coming here with a giving spirit to share your work. Cost you tens of thousands of dollars to become good at this. So does that help you, Fairy Godmother? Sometimes I don't know. Sometimes I have a high degree of conviction. I'm not afraid to say I don't know, but I wouldn't be chasing either of those risk-off trades right now. Just in case all the bears are wrong, everyone's saying this is just a bear market rally in equities, but What if we got something like this in the S&Ps? You guys seeing my charts okay? What the heck? All right. Why it's not working? Oh, it's an old one. Well, that's the right one. Maybe they changed the symbols on this. Okay. So even if this is a bear market rally, and this is A, and this is B, why can't we have a C up to 1980? And if I really wanted to get bullish, to really squeeze every short out of here, I would think we could get above 2000. So it's very possible that this was 140. So minimum is going to take us, equality is going to take us to 1960. And then if you get into a fib extension, 1.618 of this would be 220. That would take you all the way up to 2040. So I don't think the bonds would do that well in that environment, considering how overbought they are. Okay, let's see it, Sinatra. Does that help you on the S&Ps? Oh, yeah, that was good. I can't see the numbers though. Where's this? Where did this go to? What's that number right there? Because it won't magnify for me. Can you magnify it? What's that level? The first red line. Where we are now? 1190. Thank you. Nice. What do you mean, Tosin? Oh, okay. Yeah, make a new low. That's possible. That's possible. That could be. You mean like go to 1780 or something? Very possible. And with what crude's doing, that's possible. Yes, Sinostradamus. Sinostradamus. Okay. Yeah, that's possible, especially with what crude's doing. All right. Thank you, buddy. Would love to see your charts. Any other technical views you lions want to share? Who else is here today? Roland, how are you? Don, welcome back. FX John, welcome back. Hi, John. Yevgen, it's our mission to add value to your trading experience at FX Street by building you up and edifying you. Forex Pipper, how are you? Timbo, what's up? Alexandros has shown some nice work here. It's time for you, Sirik. JM, Adinda. Oh, yeah? Norm's a great guy and a patient teacher. JJDZ. Artem is a new handle. Everyone welcome Artem. Welcome, Artem. Simone, you want Norm Winsky's call? He called the S&Ps pretty good. So are you going to take his course? You're going to take his course? All right, let me look for it. Okay, Simone. Tell him you saw him interviewed with me. There's Norm's email. Oh, okay. Cool. Thank you, Fairy Godmother. Oh, Brent Harmonic. I missed it, Sarah. Sorry. So are we there? I can't tell. It's the Holy Grail system. So in your view, it's still a buy down here. Is that what you're saying? For recovery? Thank you, Cyril. Everyone thanks Cyril for his look at rent. Oh, I don't know. Janet? Thank you, Cyril. Alexandros has a bearish view of euro. I have something that kind of lines up with what you have here, Alex. Okay. So, Alex, this is what I had for weeks on the euro. I had this uptrend back test right here. So I kind of see what you're seeing too. Maybe a little work up here, but why not back to 1080 or 980? That's a possibility. Thank you, Alex. You're buying it? Well, you know, we could still go to, we could make a marginal new high. We can make a marginal new high. We didn't get to 1360. We could have another shot up here. Yeah. I concur, Don. Because of what's happening to Deutsche Bank. You know, Deutsche Bank is underneath the 08 lows. So there are a lot of things under the financial crisis lows. Commodities, Deutsche Bank. So I'm sure she's gotten a call from Draghi about Deutsche Bank, European banking system. That seems to be more ground zero this time than the US banking system. That's my guess, Simone. Yeah, she's going to speak. Yeah. But she put out a prepared statement. And I believe they can ask her questions. Hello, Chairwoman Yellen. Are you going to raise rates 4 times this year?
Well, I was going to when we did it in December, but I said we were data dependent and there could be some outside shocks that we weren't maybe expecting. So I may still do it a little bit more, maybe in a little while, or if I have to, I'll admit that I was wrong and we just don't have enough ammunition for us to do what we did when Ben Bernanke was ahead of the Fed, when he had all the tools to and oh, my neighbor Don is here. Hello, Don. Remember me from the mall shop? Remember me from the malt shop? You asked me for you asked me for my phone number, Don. Remember? We were gonna trade stocks together.
She rejected you, man. Don asked Janet Yellen out for a date 50 years ago. 50 years ago today, Don made a move on Janet Yellen. She turned him down. I hope that you've healed from that experience. Oh, Don. Yeah. I can you are a Shagans. Okay, Tolson shorting this pop. Who's Marinky? All right, let's get serious. Let's get serious. So Canada should be making more hay out of this crude. Still think Canada makes a move up to 42-ish, 41.50 to 270. Planets long the guppy. From here, 50 pip stop. Thank you, Planet. Everyone thank Planet for his live trade call and wish him good hunting on it. Buying the guppy here with a 50 pip stop. Pretty tight risk trade for Planet. Good luck, buddy. So I'm going to take a quick break. Don't fade Planet. That's all I could say. Do it at your own peril. I'm going to take a 5-minute break here, guys. Feel free to continue to share your views via screenshots, text, whatever you want to do. I'll be back in 5. And stick around for this interview. I think Terry Kinder is going to have some very nice looks to share with us. So stick around for Terry. I'm Dale Pinkert, your anchor, your confidant, your trading psychiatrist, your coach. Just call me Coach Pinkert. I'm going to go to the locker room for about 5 minutes. Get ready for the second half of the game. If the audience is nice, I'll do my Mario Draghi imitation after that. Hello, Adinda. Are you AWOL? Yes, Mario Draghi imitation. Okay. Well, if Adinda asks, tell her I'm taking a break. Be back in 5. Tab back. Hi, Rick. You're all long from Zurich. Another harmonic pattern here. Thank you, Zurich. Rick has. Oh, that's Alexandros. Thanks for all the great looks. Thank you, Alex. Thanks for the great looks in the S&Ps. Thank you, Alex. That was a trend line. Wasn't that the trend line, Jay? Oh, blue line. There is no blue line. Well, the Cayenne. Okay, so we have a little bit of divergence. Oh, crude making a new low so far without confirming. First time in a while. Canada should make its move here. 41. Okay, thank you, Rick. How many dollars from here? How many dollars from here? Down to 25? Everyone doing okay? Who's here now? Hello, Melon. Melon, Roland, BW, Don, Forex Stop Hunter, Simone, Fairy Godmother, Yevgen, John, FX John, Forex Pipper, Tosin, Timbo, JM, Jax, Izzy. Hello, Izzy. How are you? Jay, Mauricio, Glenn, Doug. Haven't seen anything from you in a while, Doug. How are you? Glenn, how are you doing? Novice is new. Everyone welcome Novice to our community. I don't know if you want to keep that handle. Or you call yourself learner. Learner instead of novice. The longer you call yourself a novice, the longer you'll remain a novice. Ricardo, Fame, FX Video, Alexandros, Planet, MRC, SW, Ali's in here, DZ, Artem. I believe Artem, the Grays are back. How are you, Grays? Welcome, Artem. Everyone welcome Artem to our community. So we should complete C. Okay, so Canada should be at 42 by then. So crude makes a new low, and we get this 50 to 61.8% retrace in USD CAD. What do you think, Rick? That's what I was looking for. I don't know what crude chart you guys have, because I'm showing it at 29. But you know what I'm saying? That while that's happening in crude oil, Canada gets up to 41 to 42 for a short. So a failing rally in Canada with new lows in crude. That's my point. Just something I'm stalking. Because I really think Canada's dogging it with this weak crude action from 35. Okay. Thank you, buddy. Thank you, guys. Thank you, Jay. Anyway, my point being that I don't think Canada's performing like it used to with crude under pressure. You know, we haven't even retraced 38% in Canada with crude making new lows. You guys don't have to agree with me, but I'm just sharing the market correlation that is giving me the message of weakness in Canada. So normally when Canada was in a bull phase, we'd already be at 43, 44. Okay. My eye is telling me, my jaundiced eye is telling me that there's going to be a great short, maybe 50% back, 61.8 back when crude finally bottoms. Just my view. And that may have to do more with dollar weakness. I have no idea what the BOC is doing. All I could do is pay attention to correlations and see when there are things that are not behaving as they should, which gives me an idea that I should be looking to fade the weakness. Canada's not acting strong, in my view. You don't have to agree with me, but give me a why if you understand the analysis. Okay, thank you, SW. Can I get whys for people that understand what I'm talking about on this correlation between crude and Canada? Okay. Mission accomplished. How you doing, Melon? Doug? Starting to get a little tail on planets. Well, no, there's probably more left. But it took a pretty substantial decline in crude to just get a fib retrace in Canada. Right? So crude's making new lows and Canada's 800 pips off the high. 700 pips off the high. Just a market observation. Starting to get a little tail on the guppy trade that Planet recommended with a 50 pip stop. That was a nice share of a live trade by Planet while it was in action. Everyone doing okay? In other words, Don, use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Guppy's coming out of here. Nice tail developing there. Initially a retest of the lows on the pound. Maybe look for something like this from here. Nothing wrong with taking partial profits either. And trailing your stops to BE, book half, BE stop, and let the market tell you. Could recover too. Oh yes. EIA. EIA-IO. Old MacDonald had a farm. EIA report. He bought some crude and was underwater. EIA report. And an EIA here and an EIA there. EIA. EIA. Everywhere in EIA. You're long the yen, looking for 146.5. You mean I'm not sure what you mean. EIA, EIA. Old MacDonald had a farm. EIA. And on his farm he had some oil. EIA. And the Saudis crushed him. EIEIA. Hi, Izzy. Thank you, Red. Rick's crude view. His crude view of crude. Thank you, Ricardo. EIEIA. Am I doing all right? So, Simone, I'm not sure what you mean by you're looking for 146. Yeah, I think there's 38 in it. It'll go above that high. That's why you take half and trail your stop. I concur with that possibility. Artem Sinatra's comment makes sense to me. Remember also, Adam said February's actually a positive seasonal month for crude oil. Adam said that as well yesterday. So what's everyone doing with Euro Aussie? It went further than I thought it would. Here's drive one. We do have a divergence in the crude right here. Everyone see this? Took out yesterday's low, first divergence. Sometimes it takes two, but so far, if this candle can hold, we have a little. Then take half off and tighten it up. He said it was constructive, seasonal. A constructive month. Okay, 118. Yeah, that makes sense. Everyone doing all right? Stick around for Terry Kinder in the next 10, 15 minutes. Don, when in doubt, get out. You got a nice little, should have some money made. I think Adam wants to buy it down at 134. So you take the position off. Like I said last week, it's not a good idea to make every trade life or death to you. it'll make you sick. It's got to just be another trade. Right, guys? It's just another trade. And then you say next. Oh. Yeah, I know Giuseppe Bazille's looking for 158. So then you know what you do? You know, you just leave your stop in where you had it and stop watching it. Stop watching it. You're too close to the trade. Or lighten up and keep a piece on in case Giuseppe's right for 158. Everyone doing okay? Stick around for Terry Kinder. Melon, how are you? John, how are you doing? It's all going to boil down to the EIA. Everyone doing all right? Give me a Y if you love this community. The mastermind that we've created here, a safe environment for you to share your work where there are no haters in here. Yelling now? Okay. Will you guys be my Valentine? As my friend Abel Lopez says, it won't be your last then. Everyone doing all right? Stand by for Terry Kinder. Terry should be with us pretty soon. Okay. Here she is. We're still waiting. I have TV on. Did we get the EIA yet? EIA. Old MacDonald had, old MacDonald had a farm. Old MacDonald had a farm. Old MacDonald had a farm. Nicola Duke. Old MacDonald had a farm. Hey, Jax, what's the chord pattern for Old MacDonald? Old MacDonald had a farm, E-I-E-I-O. On his farm he had a well, E-I-E-I-O. And a gusher here and a gusher there. Here a gush, there a gush, everywhere a gush, gush. Old MacDonald had a farm, E-I-E-I-A. All right. Thank you, Alex, for all. Everyone thank Alexandros for all his great looks today. Thank you, Alex. Who thinks Alex is a great contributor here? Okay, Glenn, I agree with you. Thank you, Alex. And I think Alex is a great addition to our community over the last many months. Have a good one, buddy. Good hunting. And remember, Old MacDonald had a farm, E-I-E-I-A. And thank you, Sinatra, for the chord progression. Terry Kinder should be with us soon. I think you'd be better off listening to Terry than to Janet Yellen today. You already heard Janet. I already told you what she was going to say. Right? Okay. Stick around for Terry. I'll be right back. Stand by for Terry Kinder. At T Kinder, Twitter handle. Stand by for Terry. Everyone doing okay? We'll get the E-I-E-I-O up out of the way. CFC. SW bought the oil, looking for a $2 pop. CFC. That doesn't go. Old MacDonald had a farm. E-I-E-I-O. Oh, that is it. Old MacDonald had a farm. E-I-E-I-A. With a fracking well that did so well. E-I-E-I-A. Thank you, Sinatra. I got a guitar lesson from Sinatra today. Tell me we're not multi-dimensional in here. Renaissance men and women. Trading is what we do, not who we are. How about an amen to that? Trading is what we do. It's not our total identity, is it? I know guys like Ricardo, his identity's in his loved ones and his family, and he's a great trader too. He's just not a great trader. Mauricio is a great FX journalist, but he's a traveler and a Renaissance man and involved in a long-distance romantic relationship. How about a round of applause for Mauricio? D. Kadick is not just a trader, he's also a gambler, and that comes into his trading a bit. Let's see, who else do I know in here? Abel Abel is a stopped. All right. Abel is a loyal friend of mine, much more than an FX observer. He's a good friend of mine. Good luck on that one as well, Ali. Stick around for Terry Kinder. He's going to dazzle you with lines like you have never seen before. He will dazzle you with lines. Everyone doing okay? Looks like the community continues to mushroom. I think I hear someone in the house. That is Terry. How you doing, Terry? Wondering if you could hear me. Waiting to be able to hear you.
Hello?
Hi, Terry. How are you today?
Good. How are you?
Good. All right. Great audio. Sounds clean. I have to apologize. I didn't have time to read your bio. Everybody, this is Terry Kinder. If you want to follow Terry, you could follow him at @tkinder. So since I didn't have a chance to really prepare for the interview by reading your bio, why don't we just go back in time, Terry, and tell us what it was like for you when you first got involved in trading, and if you had any influences or mentors. Just take us back to how it was for you in the beginning, which is usually the most dangerous stage, the early times of being a trader. I know personally I had my teeth kicked in a few times. Who do you blame for getting involved in the markets?
Oh gosh, that's a good question. You know, I'd say a lot of my interest is in trading and in gold and other things. A lot of it, I think, was just when the financial crisis hit. I've always been interested in politics. I actually studied political science in college.
Okay, which financial crisis? So in my mind, you know, after 07, 08, people forgot about 2000, 2001. So
right, I guess I'd be referring more to 2007 and 2008 are the more recent
Were you
recent
like
one.
a lot of people who had a stock portfolio that stockbrokers said that if you were diversified you'd be okay, and then you found out that wasn't true, and then decided to take things into your own hands and become more self-directed? Or were you self-directed from the onset? Because many people wanted to learn about the markets after they knew who better to make decisions than me, and not just a salesman at Merrill Lynch who puts me into a fund.
Right, right. I'd say that's true. And I mean, um, I've been interested in stocks as well for quite a while, and I guess I got started like a lot of people did, kind of like you're saying. I mean, just in investing in mutual funds and stocks and things like that. Probably got started back in the late 90s, so kind of saw like what you're talking about, the
Bust, yeah.
tech bubble and all that kind of stuff. So yeah, we've kind of seen a few go arounds at least anyhow of everything going way up and then coming way back down again.
So I notice even on your Twitter handle, you're quite the Renaissance man. I have this expression that trading is what we do, it's not who we are. So maybe you could tell people you have other interests and other things that you're involved with in your life besides trading. Is that correct?
Yes, yeah. Gosh, kind of really widespread interest. I've always liked to read a lot. So I mean, I love to read about history and have always been interested in politics since I was young. I mean, probably 7, 8, 9 years old. Was just always fascinated with the presidency and all that kind of stuff as well. And I don't know. I mean, I just love to read. Whether it's about business or whether it's about history or virtually anything. Yeah. My interests kind of range all over.
Okay. So I told the community before you arrived that you had very interesting technical work that, in fact, the kind of lines and work that you do, I'm really not that familiar with, but interesting variations on pitchforks, etc. In Hangout here, Terry, we can share charts by going to the upper left-hand corner. There's a green box with an arrow, and if you click on that, you'll be able to share your desktop, show us what you're looking at. You've been tweeting in my stream mainly about gold and the S&Ps and where we are historically, and a couple of possible scenarios which are still undecided. You show gold short-term failed at one of your bands recently, and you have a target in the dollar not that far from where we are, down around the 95 level. So okay, right now that's showing my chart in your box. So
Let me let me pop over to a
there we go. Okay.
chart.
So we're looking at the gold here, and what do you call that? A fan? All those
Well, you know
lines.
what they've got on this is Trading View. They've actually got a thing, pitch fan, and I couldn't tell you all of the all the technicalities that make it work, but essentially it's a combination of a pitchfork and a GAN fan. So it's kind of an interesting combination, and really why I use it is just because I think it really shows pretty well a lot of your resistance and support levels over a period of time. So that's kind of one of the reasons I like to use that.
Yeah, it's interesting you're showing the high from, I was in the business in the late 70s when Russia invaded Afghanistan, and gold, the print high, you have it at 873. I kind of remember 880. And before this recent run in gold, I thought there was a chance that we might pull back there if the dollar had another run. Now it looks like perhaps the gold has bottomed, and I really wasn't there for this, although mining shares were showing great relative strength before gold turned. Why are you starting back here showing us the chart from the high in 1980, which was a high that stood for over 25 years. It was a 20-year high before the bear market ended at the 200 level.
Okay. Well, one of the things I found interesting about this, I actually added some things to this chart yesterday, and had shared it over Twitter, I believe. One of the things I found interesting about this was, and I've been watching the gold price pretty closely for several years, is how much the gold right now resembles what the gold price did back in the 70s and then up to the 80s high. So I've done a few things on this. You've got the like you say, the 8, whether it's 873 or 880, you've got the high in gold. And one of the things that I've been doing is I've been playing around with angles on charts as well. So I'll take sometimes a pivot high or a pivot low price, and I will draw I'll draw a line, and I'll draw it at an angle. So in this particular case, you've got an angle drawn from the high, and it's a 65-degree angle. And one of the things that I see in it, it can be different for different different things. Maybe gold would be different. Maybe maybe the S&P would be different. But this just happened to work out to be a 65-degree angle that kind of captured a lot of the decline in the gold price. So I marked it on there, but what's interesting is if you come over to the current market and you've got the 19, it says here it's 1920 and 80 cent high. The angle is really close. If you draw the 65-degree angle, it's not quite the same, but it captures a lot of your excuse me, a lot of your decline in the gold price. And there's actually a lot more parallels. I just think it's really interesting that if you look at them side by side, and I can pull out and kind of give you a look at it. A lot of times I say it kind of looks like a little brother and a big brother. I mean, you've got,
that's interesting.
There's a lot of parallelism to me between the two. Not to say that they're going to wind up doing the same thing, but they do look really similar when you look at them for a while.
They do. They do. One's more, one has a larger magnitude because it came from a higher price level.
Right, exactly. And it's interesting too. They tend to hit on the same. At least so far, they're hitting kind of right at similar points on this pitch fan. Like if you look at, excuse me, if you look at point A, this is the same part of the pitch fan on gold over here as where it bounced in the current gold market. So they're catching a bounce at roughly the same support levels now that they did back in the 80s. I guess this is 80.
Okay. So is your premise that we bounce from C up to D?
Excuse me, not necessarily. Why I've drawn D on there. Well, I think it's possible. I mean, I wouldn't say that I would
your bearish
promise it, but I
is,
think it's possible. I think it's possible, okay. And it also kind of coincides with with some possible resistance points.
Yeah, 1400.
Right, and that seems to be something that, as I've looked at it several different ways, that roughly 1300 level, seems to be coming up again and again as a resistance level. And I think it's going to be challenging for gold to overcome.
Yeah, and then if we get through this line that we recently held a candle ago, you project to the next fan is about 880. If we break
I'm sorry,
down
could you say that
from this fan line, there's nothing till 880.
Oh, as far as support.
Yeah.
Yeah, on this one, yeah, there's not really a whole lot down there. I mean, I think it could catch, and we could look at some other charts. I mean, it could catch at some point, but I have thought
Breaking up on me a little bit.
that 1980 high. I really think we are at some point in time, and I think that might be, that might be a couple years out yet. I mean, that might be, 2019. It might be all the way out to 2023. I mean, I think gold is gonna. I don't know that it's gonna go way up, but I think it could go down, and I think it might take it some time to go down. It may not be, real fast on the downside, but I think it's going to creep lower over time.
Okay, so you were breaking up a little on me. So are you
I'm
saying
sorry. Go ahead.
Are you saying? Go ahead. So I'm not clear. I'm not clear on your view. So
okay, I'm sorry. Can you hear me better now?
Yeah.
Okay.
Where do you think gold's going, Terry? I'll just break it down. We've rallied $150 off the recent low. What's your view on gold? That we're heading up towards D, or heading down, or sideways? Are you bullish, bearish, or strongly neutral?
Okay. All right. Well, I would say in the longer run, or at least out, if you go out over maybe 3 years, or possibly a little bit better, I think gold's going to go down. It certainly looks like right now we could get a little bit of a bounce, and I've got some other charts we could look at as well, but I don't know right now that we would get way past 1300 or maybe 1400. I've seen some interesting charts. I saw a guy that did some Elliott wave analysis, and he thought gold might bounce all the way up to 1600, and I don't know about that, but I mean it wasn't something I would discount. But I do think over the next several years it's probably going to go down, and I think at a minimum it's going to retest that 880 level, and it could end up going below it. But I think at some point it's got to.
So right now there's nothing actionable for you in gold.
I think it's going to go.
You're breaking
longer
up
term. Personally, I would just rather wait until I think it's closer to a bottom, and then either buy the actual metal or do something else. But for me, I'm just kind of waiting for it to get down towards where I think a bottom is going to be.
Okay. So we may have topped short term. You showed a shorter term chart with a band on Twitter that showed that that might have been it for now.
Right. I think it's possible. Let me go look and see. Let me try to find another chart, and I can kind of show you what I've been looking at.
Do you teach people how to trade, or you just trade your own account?
I've just been trading my own account. I haven't really done anything as far as training anyone goes.
And your livelihood is from trading?
Actually, kind of do a variety of things right now. I actually have one of the things I'm doing, and I've done in the past too, is I've actually got an e-commerce business. I actually do some things on Amazon. I sell some products through Amazon. You can actually buy products, and you can ship them and Amazon will warehouse them for you.
Hmm.
So actually do some of that. I'm a little bit all over. I'm a little bit all over the place as far as what I do. I kind of split a few different ways right now. I'm just trying to find the chart. Let me see if I can find. Well, here's one. This isn't the one I'm thinking about specifically, but I think it'll work.
Okay. Yeah, I think that's the chart I showed, and you had a band up there around 1200 on Twitter.
Right. So this is one view of gold, and I've got one I'm going to try to find. I think it'd be a little bit better than this, but yeah, basically this is a regression channel, and you're going back to a little bit around the middle of 2013, and gold's really just kind of been in it's a pretty wide range, but it's been in a a declining channel, and it spent quite a bit of time the last 2015 into this year until recently. It's spent a lot of time right at the middle of that channel or a little bit below until just recently. So to me, I mean, as long as it's in that channel, it's not really, I mean, obviously, something shorter term or maybe medium term, a person could trade on it. But I mean, I don't really see anything to say that the long term trend down is broken. I mean, to me, it's just kind of more of the
Looks like that would take 1250 to come out of there.
Yeah. Again, you kind of get in that 1200 to 1300 range where, yeah, you don't break out of this channel until about the mid 1200s.
Okay.
Let me see if I can find. I had one I liked a little bit better than that, but let me see if I can find it.
And you seem to be pretty bearish on equities with the charts that you were showing on Twitter. So maybe you want to.
Well, that's not the one I wanted to show.
Okay.
Yeah, I have been, and
well, you could show that gold chart. You could show that gold chart. We only saw it a second.
Okay. Yeah. Let me go back to it. This is another one, and it's a little bit busy, but again, it's kind of been an idea I've been playing around with. I've kind of been layering in some things on some charts to try to find some support and resistance. So you've got kind of a multitude of things on the chart. You've got some of these lines that have these Fibonacci looking numbers on them. That what they're called is like a speed. It's a speed
line. Okay.
Yeah, like a speed line. So I've layered some different speed lines, and they're running from different points. You've got a set that's running from up here somewhere in the 1800s. I've got some, I think, that come back to the high. So I layered a couple of sets of those, and what I'm trying to do is to find more support and resistance points on the chart. And then I've also drawn in some support lines that are those angled lines that I've drawn back from different pivot highs and pivot lows. So like if you look at this blue line here, it's actually, well, I don't think that's quite the right point. I think that's supposed to be 101. That should be back, I believe, if we go back and look at it. That line
getting a big bounce in crude, getting a big rally in crude, getting a big bounce in crude. So the EIA must have been showing a drawdown or something. I'm bottom picking the crude. I know you were also showing crude charts, so.
Oh, okay.
Yeah.
Yeah, this one on gold, this actually goes back to 76 to the low, that blue line.
Wow, that's when I started in the business.
So
I think that's when they made it legal. they made it legal to own gold again in
Right,
1966,
right.
right? And it opened at 200 and promptly fell to 100.
Wow.
And that was the beginning of the bull market, 1976, 77 to 1980. Yeah,
And
I remember that.
kind of the idea behind some of these different angles is it's basically growth, kind of natural growth patterns. It's sort of a shortcut is really what it is to look at kind of natural progression of growth and decline in prices. So I thought that blue line was kind of interesting because you can see we just bumped up over it again. So I would consider that it's kind of a resistance, and you can see it's provided some support.
Maybe we pull back and get a right shoulder. Yeah. Here's a thought I have in mind, and I'm not sure the dollar has peaked yet. I mean, has bottomed yet. You know, maybe we go there deeper, but I was thinking that perhaps we still have one more rally in the dollar above par. And while that's happening, we get a wave 2 or B pullback in gold. Dollar makes a new high, gold makes a higher low. That's something I have in the back of my mind as a possible scenario. So then when the dollar finishes its wave to the upside, gold could be a great buy there, some type of fib retrace of this recent rally. So the dollar makes one more high, it's in 4, it makes a 5, and gold pulls back in 2 while after the dollar peaks and then heads up, 1 down in the dollar, 3 up in gold. What do you think?
Right. I mean, I think that's possible, and
Thanks for interviewing me.
I think.
Do you like the way I interview myself?
I'm sorry?
Do you like the way I interview myself?
Yeah, that's good. That's good. That's good.
I'm my best
no,
audience.
I was just going to say, I think this decline in the dollar is temporary. I mean, it looks like we're getting a little bit of a bounce today, but yeah, I think I think the dollar is going to keep keep running higher, and I think I think it could get higher than a lot of people think.
Well, I've heard targets as low as a 75, 85 cent euro. Are you in that camp? And do you have anything dollar or currency related you want to share with us?
Let me look. Yeah, I could. Let me find see what I got for the dollar. Let's look at the squares and see. Okay, it's kind of another way of looking at things. Let me get rid of something here.
Yeah, these look more like harmonic type patterns, right?
Right, and I think I had someone look at it the other day and ask me if it was Gann squares, and it's not exactly that either. Although I imagine it's probably got similarities to both, but it's basically taking and I don't remember exactly where I started out on this thing, but it's basically taking from like a pivot high to a pivot low, and making a square out of it, and then making a series of repeated squares out of that run from a low to a high or a high to a low, and then drawing these lines across it. So you've got different angles. So you've got maybe like a 45-degree angle here or something roughly like that. But kind of my purpose of showing that here is, if you look as the dollar is spiked up, it's basically still above a trend line. So it hasn't come down. I mean, it can come down to, I think on here it's roughly 94.18 and still be above that trend line. So the dollar could pull back pretty far before it breaks. But then when you look at this, if it stays above the trend, I mean, you're talking about getting up above 100, you know, pretty substantially before you start to run into some other resistance lines.
Where, all the way up at 114?
Could be, and I, you know, I've kind of thought personally that I wouldn't be surprised, and I couldn't really tell you a time frame off the top of my head, but I wouldn't be surprised if the dollar ends up, you know, at 120 or above that at some point. I think it's going to go a lot higher than a lot of people think, and I know there's been a lot of talk of you know, currency crashes and the dollar crashing, and I don't know. I mean, maybe at some point it does, but I don't. I kind of like some of the things that you know, that Armstrong has said. I think that you know, that Martin Armstrong said. I think a lot of other countries are going to have problems before we do, and I think that's going to push a lot of capital flows into the U.S., into the stock market, and I would suspect it push some money into the dollar and push the dollar higher.
Well, you know, a perfect example of that is compared to Citi or Wells Fargo or even Bank of America, Deutsche Bank is back at 2008 crisis levels, even lower. So the epicenter this time is not the U.S., it's Europe and China. So I do believe, I've interviewed Marty a few times, that's behind the thesis, the cleanest shirt in a dirty neighborhood.
Right. I think there's a lot of truth to that.
Okay. So I think Martin Armstrong's still sanguine about the stock market until 2017 as well. And we've recently had significant support being tested at 1800. And what's your view on S&Ps? Perhaps we could wrap it with S&Ps and crude.
Okay, let me get in here and see the S&P. Yeah, I was going to say earlier, one of the things I had run across doing some reading, and I don't know if you ever saw the chart I did or not. One of the things I ran across, my computer's being slow on me. One of the things I ran across was some charts talking about 102-year, roughly 102. It can be a little bit longer, a little bit shorter cycle in stock markets. Except it's not exactly a I guess it would almost kind of be a mirror cycle. The cycle was about 102 years, except it alternated. Like if 1914 was an up cycle, then you draw out 102 years and you got to roughly 2015, 2016, and that's a down cycle. And I actually had posted a chart that takes the stock market back then and it turns it upside down, and it kind of looks like what's going on now. I mean, it kind of looks like it rolls over just like what's going on right now. And I really think, I think we're in for a pretty good downturn. I think it's going to last a while.
Okay, can you recall in your head what type of here we go. Oh, that's the gold again.
Let me look. I should be able to pull it up. Might take me just a second because it's it's somewhere different. But I mean, I really think, and I can't remember if it was this source or if it was somewhere else, but it was talking about bear markets and bull markets being essentially like five-year cycles. So like a bull would be like 2 years up. It's the opposite, a couple years down, a year up, and a couple years down. So, I mean,
don't
by the
know.
looks of it,
We went up from 2009 till last year's high. That was 6 years.
right, and that's a pretty long one. Yeah, that's a pretty long one. But if you look at some of the others, I think they fall a little bit more closely to the 2-1-2. I mean, obviously that's not like a a commandment or anything that it has to happen, but I mean, it is a pattern that has repeated quite a bit.
So do you have any downside targets in the S&P or Dow?
I don't know that I have one as such. Let me look real quick. I'm going to see if I can find this this chart. Okay. I think it's one of these. Okay. All right. So this is now this is up. Let me see. Oh, okay. This is right side up, I think, which is fine. I can show you this first. So this is basically the stock market. You've got the stock market here was closed because of World War I. So it's not a perfect chart to use, but
how long was the market closed during World War I?
You know, honestly, I don't know, but it was closed for several months. It was closed for a pretty good period of time. Actually, this is right, because if you'll notice, the scale's reversed. You got 50 down here, and you've got 120 here. So this is the upside down chart.
Okay.
This is the upside down chart of the market back then. And I can get the right. I probably could get the right side up one too, but this is if you turn the chart upside down, and I think it's really interesting. This part's a little bit irrelevant because basically you had a big decline, and then the market went up pretty sharply when it got reopened. But the part I find interesting is that you got this kind of these two peaks here, and that these two peaks, I mean, I think that we say back in, oh, I don't know, you might be looking at, I think this peak here might be roughly around where things were, say, around the December, January time frame. So I mean, if you look at it in terms of years, I mean, you've got, oh, what is this? This is March 15 here, and then I don't know, in here you might be around December, but you're talking about a decline of, you know, almost a couple years. I mean, it sort of works out to that 2-1-5 model. This is might not be quite 2 years, but it's roughly 2 years, a year, and a couple years. Okay. So I think if you apply it to the current, you know, the current time period, I mean, you're looking at something from what we started roughly declining around, what was it, May 2015 or something like that. Mm-hmm. You'd be talking about a bottom somewhere maybe late.
Okay, Terry, we're going to have to wrap it. There's someone behind me.
Okay, sure.
Program right behind me. Why don't we wrap it up with, you said you had a high degree of interest in politics. Who's going to be the president next November?
Oh boy, that's a good question. You know, I think there's a possibility that Trump could win. I really do. It's hard to say. I mean, it's hard to say because you know, if things start to consolidate and maybe some of those other candidates start to disappear, maybe, you know, maybe someone who can put together some
Here's
votes,
here's my prediction that Jeb Bush will be nominated at a brokered convention, and they're going to steal the nomination away from Trump. So that's my
oh,
note
wow.
for Picker. I want to thank you, Terry, for coming here and sharing your work and your views with us. The best way for people to follow you is on Twitter at @tkinder. Is that correct?
Right. Yeah, they could definitely go there, and I've also got a website too. They could come over to it's at chartanalysis.silverback, and it's spelled SILVRBACK.com.
Okay. So Terry, it's been a pleasure meeting you. Good hunting the rest of 2016, and perhaps we could get back together down the road and see how things are evolving.
All right, that'd be great. Thank you very much, Dale.
All right, Terry. Thank you, buddy.
Thanks a lot.
Everyone thank Terry. Everyone thank Terry for his time. All right, I'll do a quick wrap up here. The crude oil, nice call by SW. We rallied right to the 50-day and came off. This divergence did work. Still thinking that there's a play on the long side of the dollar. Euro's coming off. 1080 would be a natural for it. US dollar yen, I'm looking for rallies back towards 118. And Canada's still sideways with all this volatility in crude. I want to thank everyone for their contributions today. I want to thank Cyric and Jay and Artem, Abel, Ali, Timbo, Sinatra, Adinda Planet, Fairy Godmother, Glenn, Mellon, Roland, Alexei, Don, Yevgen, John, Pip Sniffer, nice nice crude scalp, SW, Pip Sniffer, JM, FX Ambassador, Jax, Mark, Izzy, Mauricio, Doug, Novice, Khalid, Ron, Ma, Ricardo, Fame, MRC, Doug, DZ, The Grays, FX John. Thank you, everybody. Have a great day. Good hunting to everyone. Remember, don't just count your pips. Count your blessings. And I count working with you guys on a daily basis, giving me the edge to become a better trader. Thank you for your giving spirit and sharing all your work. And I'll be back with you guys tomorrow. Enjoy.